Hi, I am Bala. If you are running a small business unit or a small scale industry, or if you are running a department, say a marketing department in a big multinational or a small company or a middle scale company, then this is the video you should never miss. So today we will see what are all the basic things we normally miss in running such setups. So one of the main thing is the cash flow. Cash flow is the most neglected aspect in any business situation. People calculate how much is going to be the profit. It will be there on the paper as you start the business, as you run the business. Profit will be there. It will be accountant will show. But are you having the cash flow to run the show? Do you have cash to pay the bills, GST, advance tax, vendor payment, payroll, so on and so forth? You have 20 heads. Do you have money? If the cash flow is not planned properly and done, then we have to, the business will choke. This is something very serious. I've just cited one important thing. People miss these such things. It's very difficult to run without proper cash flow. Profits will come if the cash flow and working capital is properly managed. Surely it is bound to come. Otherwise, it will remain on the paper. Now, let's get into the bolts and nuts of the same discussion. Small businesses should avoid few core pitfalls if they want sustained profits. Steady revenue growth, and a safer long term outlook, weak planning, poor cash flow control, customer concentration, underpricing, and failure to adapt. These are repeatedly cited as the main reasons small firms lose momentum or become fragile. So, what are all the mistakes to avoid? No clear business plan or goals. Planning, market research, and specific short and long term goals are foundational for durable growth. Poor financial discipline, overspending, underspending, weak budgeting, and not tracking cash flow can create avoidable stress and liquidity problems. Relying on one big customer. If one customer is too large of revenue, the business becomes exposed to margin pressure and sudden revenue loss. Similarly, we should not depend on such customers who are too demanding and they are asking for lower price and very liberal cash credit system and so on. Such customers become nuisance. We need to avoid such customers also. Underpricing the product. Who is going to be benefited by underpricing? No one. Surely not the company. Underpricing brings down the value of the product and the company. Underpricing products or services, charging too little can hurt profitability even when sales volumes look healthy. Revenues, too much of sales growth or revenue can be misleading. You will be doing more work at the end of the day, you won't earn profit or cash flow also. So, revenue is important, but healthy revenue is important, more important. Ignoring marketing. Without consistent customer acquisition, revenue tends to stall and become overly dependent on referrals. Trying to do everything alone, that is, not delegating to people. Overload and lack of delegation usually limits scale and increases owner burnout. Skipping return contracts, that is, verbal deals, raise legal and payment disputes and can damage future stability. Weaker customer service. Poor service reduces repeat purchases, referrals, and brand trust. Trust is something very important from the customer point of view, vendor point of view, employee point of view, stakeholders point of view, everyone. Trust is something single cornerstone on which the business revolves. Not protecting the business from key person risk. If the owner or a critical employee becomes unavailable, operation can suffer sharply. So it should be more system oriented. Depending on unstable suppliers, supply disruption can break delivery promises, and damage reputation. Neglecting internal controls, weak oversight of bookkeeping and payment increases fraud and error risk. Losing focus, chasing too many ideas once often weakens execution and profitability. So, what matters most? For long term survival, the biggest themes are simple: protect cash, diversity revenue, build repeat customers, and keep business adaptable. A small business that grows sales but ignores margin, customer concentration, and controls often looks healthy, but one shock exposes the weakness. So, what are all the practical safeguards? Review cash flow weekly, if not monthly. Every day it should be reviewed, and weekly it should be reviewed bi monthly. Keep at least one backup supplier for critical inputs. Set minimum gross margin targets by